everyone, John Henry here, slingshotfutures.com, and welcome to the daily market outlook for the futures markets for trading tomorrow, which is the 14th coming up. So the main objective that we're looking to do here is formulate an attack method for the big six markets that we trade, in this case the Bund, Gold, Bonds, Crude, NASDAQ, and the S&P, and create an attack plan for tomorrow as best we can, so we are coming into tomorrow's trading with a little bit of preparedness behind us. Now before we jump into all the charts, make sure to swing on over to slingshotfutures.com, scroll down and click on the Join the Daily Outlook newsletter, and that will sign you up for the email list so you'll be notified every single time one of these comes out. We talk about different statistics and different stocks and things that we're keeping an eye on as well. And then at the bottom of the page in the blog, you have the psychology videos that we do every day that goes over the psychology of the markets and the movements that we're seeing. Is just a way to sort of learn more and be, that much better for the next day of trading. And then along with that, we also have the morning prep levels, which are posted every morning for you at the bottom there. So that's going to do it for that portion. Now, when we're looking at the markets, so far, we were talking about on Friday and Thursday how after such a big explosive move, you tend to see a little bit of a pause. The market generally wants to kind of figure out what it needs to do. It's going to lull a little bit. It's going to go a little sideways, a little slower, more of a relaxed pace. And what better day to do it than the Monday after daylight savings time, right? Now with daylight savings time behind us, at least for most of the US, some parts of the US haven't done it yet, some parts don't do it yet. And of course in Europe, it'll be a little bit of a different scenario, but for us here, we have the daylight savings time stuff out of the way and behind us, and that's kind of a good thing. We've got that slowdown out of the way. A lot of folks coming into the office late. I know my alarm clock didn't go off on time either. So everybody is going to be a little bit off kilter when you're looking at this kind of change in the time. It throws your body off. It throws your mentality off. You wake up a little more groggy. It's a change, and it takes a little time to get used to, and the market definitely made us feel that was the case today. We started off on the Bund with a big, strong run higher, and then it just kind of fell apart. We had a nice pullback, a good new high if you were trading earlier this morning in the European session, but then it just got pretty grindy, right? Now, that did start to form a bear channel working its way lower, and we're attempting to attack this bull move higher. The major objective for the sellers here, and really what they're going to want to see, is a retest of that low, 158.94, as well as potentially a breakdown to last week's low, which is at 158.87. That also happens to be the low of Friday. That's the main objective on the sellers' minds right now. If the buyers are still in this for whatever reason, after they bought way back here, where are their stops? Their stops are going to be underneath the lows, and that's a really nice place to potentially catch a final target to get a little bit of a pop lower, maybe finish off those major objectives below. Either way, the sellers currently own the Bund on the downside, so looking to sell wherever possible, and preferably at better prices. When we're looking at the market here, generally better prices could be a small little pullback, maybe one or two candles. Other times it can be a much bigger pullback that you'd be looking to sell into. In this case, we can see that the market started correcting back down, chopped through the moving average, broke back underneath monthly support. We then found a double bottom, tried to turn higher, failed again, and then used it as resistance. So this area, 159.29, is a phenomenal place to potentially look for a re-entry to the downside to look to kind of push it right back down again. Now, depending on when that happens, especially if it happens sooner than later, we also have the sweet spot where we have horizontal resistance lining up with the channel highs, sort of creating this pinnacle area of interest for sellers to try to come in and bounce the market back down to a new low. Either way, though, we're looking to sell, just not right here, preferably at a better price. Over on gold, a little bit choppy, sloppy today. We had a nice run to the upside, but that quickly gave itself up down to a new low with about equal movement to the downside as we saw to the upside. Big breakout to the upside, completely fell apart. Big break down lower, and that really just puts us in a range, right? Starting off from the beginning of the day, we have a new high, into a new low, into a new high, into a new low. We expect to see the market want to go back up and make a new high. Inside of this major range, we are also forming a smaller range, which is pretty apparent right inside here. Now, this range that we're forming seems to have a higher end and a lower end, and even then, you also have a possible little sort of bottom third or so, which seems to be a little bit of an area of resistance, but the higher end, 5.9 to 6.2, and the lower end, 3.2 down to 2.5. Now you will notice that we also are forming a wedge, and there is a big thick purple line here. That giant thick purple line is a major downside objective for sellers. So we still have a selling emphasis. I would much rather be a seller here than a buyer, but there are a couple things that are in the way at the moment. Not only are we kind of stuck in a range, but we also have a rising area of support, which I would prefer to not trade into. So what I would rather look for is a breakdown through that support, show that the buyers may want to try to get it going, mainly in hopes of, for me at least, trapping them, to then turn around and slam it to the downside to finish off that objective at 1.5. So that's what I'm looking for right now, waiting for this support to get out of the way and then use that area as a retest for resistance to drive the market back down and finish off that target at 1.5. So definitely looking to sell, even though in the long run, probably be better off buying at the lows if we can get that push down to 1.5 and then cycle it back up. On the bonds, grinding its way lower, relatively straightforward, nice little wedge towards the end of this move, big spike down, and then we start finding a little bit of a wedge. Whenever you have this type of formation, we have a big spike down and then it goes into a wedge like this, or a channel is another way to look at it. Generally speaking, the market will have a correction at some point, and a lot of times that correction happens in two legs, and it comes back to the major area where the channeling or wedging started, which in this case is going to be around 146.23 up to 25. And that's going to be the big area that I would love to find some selling pressure to drive the market down one more time. It might not be able to make it to a brand new low again, but at least give it an attempt. If anything, maybe a double bottom, maybe a little bit of a higher low, but either way, looking for selling pressure out of that band of resistance to drive the market back down and look for some profit targets back towards the low once again. Over on crude oil, if you wanted a range, crude is the one that's in a range. Now, I have several different levels marked up here, and really the big ones that we need to keep an eye on are the ones in blue, right? The highlighted range in blue, 48.22 to 48.50, seems to be the area that the market wants to stick inside of. That's sort of the mean, right? That's the regression to the mean. When the market gets away from this balance area, it tends to get snapped right back into it. They tried getting it away from here, and it snapped back in. Tried to get away from it there, snap back in. All of these wicks on the bottom, you can see the exact same thing happen. So this sort of median range here between 48.50 down to 48.22 is definitely an area of interest, and more so an area that you don't want to be trading in. What I would rather look for is the market to try to break out, right, and fail, because it has done so many times already. And what I would really like to see is a breakout to those extremes, right? These would be considered extreme deviations through the lows and the highs, and that's the last time that happened, had a massive reversal to the other end. So I'm looking for the market to either come back up towards the highs, fail back in, or come down to the lows and fail back in. Either way, right now where we are, this is a no trade zone. I am not interested inside here. It is way too choppy, way too dangerous between 48.50 down to 22. So until we start getting a breakdown or a break up, either way, I'm looking to fade those, and we know what to do with the range. Buy low, sell high, and stay out of the middle. Over on the NASDAQ, nice bullish momentum to the upside, good bull wedge working its way higher as well. We did seem to run into a little bit of a ceiling up here, and we can see right after the open, 9:30, we had a spike up, got stuck, came back, made a few lower highs, and then got stuck there again, stuck there again, stuck there again. When they finally broke out, they use it as support. So what I'm looking for is this area up here to be a major area of confluence. I want to see the market come back to it, try to break out of this little bit of a range-bound funk that they have going on right now, find support off of that 94.5 once again, and then re-attempt another high. Now, the same thing that we were talking about earlier, it may not make it to a brand new high, but we're looking for them to at least make an attempt. So that's kind of what we're looking for, a little bit of a pullback, better pricing around 94.5 to get that move up going. And if that does end up failing, using it as possible resistance, there you have that sweet spot once again, either as support or resistance, depending on when it approaches there, with horizontal resistance or support, as well as rising support coming into the same place. Now, if it does start to break through that, I wouldn't mind using that as resistance to drive it back down into major earlier support at 53.88, and that would be the next area of major interest. Either way, though, the buyers own the market right now, need to be looking to be a buyer, so we're looking to buy, but not right now at the highs, looking to buy at a better price. And then finally, on the S&P, we have a much more range-bound scenario. The NASDAQ at least had a little bit of a trend to it. The S&P does not. This is about as far away from a trend as you can get. Now, the overall momentum, again, just like we were talking about, we do have a mean, a range area that the market tends to want to come back to, and that's between 23.66 and a quarter up to 2370. Now, the outside deviations, the extremes, 2372 and 2364 and 3/4. And every time the market comes down to those areas, we tend to see a big reaction. We are right there right now. So looking for possible selling pressure up here to shove the market back down, maybe just back towards this sort of monthly and weekly area of support that's coming into play at 68.25. That's sort of chopping its way through the middle of price, and that does end up being pretty much smack dab in the middle of that outlined range, which means that this is sort of a midline as well. So in terms of objectives, I wouldn't want to try to trade through this with everything, maybe take partial profit, something like that off at that area. Either way, though, looking to sell up here, drive the market down to the medium targets as well as the larger targets to the other side, and runners all the way down to the lows. And that's what we're looking for. So looking to sell high, buy low, and stay out of the middle. Now, that's going to do it for today. Hopefully you rested up over the weekend and got that daylight savings time stuff out of the way. If you haven't yet, just keep an eye on it. Make sure that you don't get stuck trading when, it's actually supposed to be an hour later. Definitely not a good situation to be in. So know when that news is coming out, especially around the daylight savings time stuff. And like we always say, make a plan, trade the plan, follow those rules, and you will be A-okay. Until next time, we'll see y'all tomorrow.